very close attention to is the Fed fund futures out into the future are pricing in a 50 basis point cut in December of 2027. And remember that the markets, prior to the war starting, were pricing in a rate cut in June. And so it was pushed all the way to June of 2027, and then now all the way into December of 2027. And so why are the Fed fund futures pricing out a rate cut so far into the future, moving so far into the future? It was because of the elevated crude oil price. Crude oil spiked, and that spike has created an environment where market participants, and this is price, what they are pricing in is that the Federal Reserve will be unable to cut interest rates at the pace that they were previously anticipating them to. And so the next question is this. We are stuck in crude oil between two opposing measured moves. There's a short from highs on the daily chart, and then there's a long from lows from 2 Fridays ago, lows to highs. When you're looking at BZ, the trend is up. And when you're thinking about BZ, we've actually confirmed our targets at $133 a barrel. And then that potentially leads us to $169 a barrel. And so what BZ tells us is that there's a future where if crude oil prices remain elevated, and this is not even, from the perspective, not even rallying, just stay elevated. All they have to do is stay elevated for, another 4 to 6 weeks, and we're going to start seeing this inside of inflation data. And if we start seeing this inside of inflation data, then the Federal Reserve, it's not only going to be unable to cut interest rates, it's going to have to start talking from the perspective of we might have to hike rates. So, here's the question. That's a narrative, right? That is a question about a narrative. If BZ defends this pullback, then that narrative could potentially be true. Here's crude oil prices in CL terms. CL did not break out of a short setup. It's falling away from a resistance level. If it falls through this support level and falls into the 69s again, no problem. It's not going to affect inflation expectations. And if it's not affecting inflation expectations, if consumer prices and producer prices don't rise, then the Federal Reserve will be able to go back into pulling those rate cuts into the future. And so this pullback, whether you're thinking about it from the perspective of crude oil or you're looking at it from the perspective of BZ, CL or BZ, is that this pullback is going to decide whether those rate cuts will be pulled into the future if we go through these pullbacks. If we defend them and start rallying away from them, that would pull not only create an environment where the Federal Reserve would not be able to cut interest rates, that they'll have to actually start talking in hawkish terms. As in, we're going to have to, hike interest rates. This stream continues at emoneyaddict.com. The link is in the description. Join me there for tools and resources for learning measured move trading. I wrote the book on the measured move. Check out the hundreds of others that have learned trading plan development, pattern recognition, money management, and trading discipline with me to become the best, most confident trader that you can be.